Most global share markets rose strongly last week. We saw the US, the UK and European share markets all rise between 2 and 3% each. Locally and across the ditch, we saw the New Zealand market and the Australian market both rise around 1%. In terms of currencies, we've seen the Kiwi dollar come off the boil quite substantially over recent weeks, and the currency fell against all major trading partners last week. We're now down to below 67 cents against the US dollar and below 46 against the British pound. There could be more data from offshore this week that'll drive the New Zealand dollar's direction. We'll see some important releases out of the United States as we move towards the Federal Reserve meeting in the middle of June, where the US Central Bank will consider raising interest rates again. The jobs report is out, as well as key manufacturing indices and some inflation data. If all of this US data turns out to be quite strong, expectations of a rate hike could increase, and that could see the US dollar gain further. If this data is very weak or weaker than expected, we could see the US dollar weaken a little bit and the Kiwi dollar rise. On the local economic front, the key release is probably the ANZ Business Survey for May. Now, this is likely to remain reasonably unchanged from a month ago, where we saw business confidence rise slightly and inflation expectations remain pretty subdued. We're expecting a similar outcome. Not a lot's changed over the last month. We would expect most businesses to be reasonably upbeat, yet cautious about the outlook, with most of the weakness coming from the agricultural sector.